Welcome everyone. We are going to cover the stock market charts, looking at the general indices, seeing what's going on, where we think the market's heading, using technical analysis to really be our guide. We'll point out some individual trade ideas. I'll cover gold and the mining stocks. There's some action that took place late last week on that one, and I haven't put out a video since, so I'll cover that, and then we'll go ahead and wrap up. So getting into it, we'll start out with the Qs. Zooming in today, you can see just more sideways action. We've really gone nowhere for, quite a while, but basically since about July 23rd, coming up on almost a month of just sideways action in the tech sector. The buyers are just stepping in on any little dip and they're buying it, but they're not able to really push it too much higher. So we continue to have negative divergence in the momentum indicators. It just continues to build. So the trend is up in price. As you can see, obviously the trend is up in price, but the trend is down in the forward leading indicators, the momentum indicators, which I use the PPO. You can use the MACD, moving average convergence divergence, if you don't have PPO. And then I also use the RSI. So both those indicators are telling me that momentum is drifting downward or downtrending. And momentum often is a leading indicator of price. So price continues to this kind of sideways with a slight lean to the upside. And that's it. That's all that's going on here. Let's look at the some of these FANG stocks as we dig into the tech sector. Here's Amazon. Again, we're just back. We had our false breakout or our bull trap. We're back within this big sideways range that we've been in for, that it was in for over a year. We're back in it. I think we're heading down to the bottom of the range. I don't see any indication now that we're not going to head down to the bottom of that range. One of the reasons being is the negative divergence that's been building, as well as the bull trap or the false breakout. See this sideways range, we broke to the upside, and they made it look like it was going to break, but then it gapped down. It was a false breakout or a bull trap. So anybody that took that breakout was trapped with losses. So Amazon still looks like it's heading down, and that's likely going to continue to put pressure on the tech sector. Google, you can see today they started, they're playing games with the trend lines. But here on Google, you've got this upward price channel on the daily chart. We have negative divergence. See how we're downtrending? Even though we continue to trend up in price, we're downtrending. And zooming into more recent time frames, here's the daily chart recently, and you can see we've just been grinding along the upper end of that trend line. Today, they dipped it below. Let's go to the hourly to show that. So we had an hourly break of the trend line support, and they spent the rest of the time recovering that, basically, and moving that higher. So clearly, they're playing games in this area. You need to see a nice, solid breakdown. And we just don't have it. And again, one breakdown in one FANG, you want to see most of the FANGs breaking down to help confirm. So things to look for. Microsoft, slight grind higher. No real change. Last 3 days we've been moving higher slightly. And Apple, again, they're bidding up Apple. These FANGs like to play the game of whack-a-mole. So when one FANG sells off, like Amazon right now is kind of weak, then the other FANGs, then the money comes out of that and goes into the other FANGs. It's pretty much like the market, the hedge funds, the institutions need some sort of FANG stock to be in. They have to allocate money to those for benchmark performance. And so that's what we see. But as of right now, Apple's still just kind of trading sideways, basically, in this range right here. No definitive breakout of this sideways range quite yet. So we'll watch for that. Facebook making this big bearish rising wedge coming off the March 2020 lows. We continue to wedge higher, above support, trending upward. Bullish trend for sure in price. And yet we have negative divergence. So this was your last high, which was a divergent high, meaning it was a lower high in momentum than the former high in momentum. Okay, if you don't understand these concepts, check out my stock market technical analysis and trading course. I go through the concepts of negative divergence, risk-reward ratios, position size management, trend line analysis, candlestick analysis, all these concepts for pretty thorough training. Check that out. Link in the description below. And SPY is continuing kind of the super low volatility, grinding drift higher. Okay, so that's likely going to continue until we see a change. Although the big negative divergence that's just been building, let me grab the right tool here, indicates that we're going to get a swift move to the downside. We just don't know when. This can grind on for another month. We might come down, hit support, continue to kind of grind sideways to up over the next month, and then get a big swift move down. We don't know when that's going to happen. But the indicators tell me that we're going to get it. We're likely to move lower with a big swift move to the downside. Given the nature that the volatility has really been compressing as well, I think the move to the downside will be a rather sizable one. And so that's why I'm really more interested in just waiting for that rather than putting new money to work or being long this market. If you're long the market and you're just riding the trend, that's fine. You just have to understand that when that downside move comes, there's a high probability you're not going to be able to spot it or not going to be able to get out. So you're likely going to get trapped into that downside move. That's just how the market works. It doesn't let everyone out at the top. It doesn't give signals. It doesn't ring a bell at the top is the saying, but it's not going to indicate to everyone, okay, now's your perfect time to exit. Feel free to take your profit. Because if everybody did that, the market would plunge, and there's just no indication. Not everyone can sell. There's just, it's just the nature of the market. If everyone sells all at once, obviously the market crashes. And yeah, that's just how it works. Not everyone's able to get out at the top. Okay, but no indication right now I see in the SPY of a top. We could grind on a little higher. So I'm not short any of the indices. I'm just waiting on the sidelines looking for that. IWM, again, if you were long the IWM or the small caps, you've made no money for almost, the beginning of the year. And if you're short, you've really made no money either, just sideways. So, that looks like a topping pattern. Doesn't have to be. We could just be consolidating. At the end of the day, we got to see which way we break out of this sideways pattern. So break to the upside should be bullish. Break to the downside should be bearish. Until then, we're just kind of neutral on that one. Okay, let's take a look at gold. Here's gold bullion. So last week on Sunday, in the early morning hours, they smashed gold down. Obviously, that was a manipulation, or someone was trying to do that because, there was a market order that was floated out there Sunday early. It's just pretty obvious. So they smashed gold down, but that has since pretty much recovered all of that selling. Not quite, but very close. The one thing I want to point out, if you look at the weekly chart, and I talked about this in some of these videos, this is the uptrend line in gold. We had this uptrend line here, and we broke it intra-week. You can see we broke that trend line. So see all the times we held support there, held support through here. And then here's the intra-week big wick candle. So that's a reversal doji. That's what that candle is. But we broke down, hit that support, and closed the week actually slightly higher. So we had a green week in gold, a positive week in gold, even though you had that big smash down on Sunday and last Friday. So pretty bullish price action to see us kind of sell down like that and then completely recover and reverse. And so far this week they're buying it up as well. So all this price action right here looks pretty bullish because of that big doji candle, that big reversal candlestick on the weekly chart. So things to look for there. And then going to the daily, you can see we've recovered that trend line as well. Again, I was anticipating this because of the bullish divergence. You'll see here, I've got it all circled out through other videos. I pointed that out. But basically, here's your former low, here's the low that it made. And you see the momentum. It was much higher momentum than the previous low. There's your previous low area, and there's your momentum. So you had a lower low in price, but a higher low in momentum on both momentum indicators. That's bullish divergence, indicating that there's likely there's going to be a reversal from the downtrend. And sure enough, that's what we've seen so far. So that's bullish in general. I'm bullish gold, bullish the miners. The miners haven't quite caught a bid yet, but with gold holding up and pulling this, this reversal from last week, I think the miners should start catching a bid once people realize that they haven't quite been bid out yet. I think buyers will be stepping in there pretty soon. Let's look at some short trade ideas. Tesla, I haven't talked about this one for a while. Again, I've got this, we basically had this uptrend line here on the daily chart. We broke trend right there. There was your initial sell signal, and it broke down. It's created the secondary support line. I've got it marked here in blue on the daily chart. We've just been walking up that trend. I think it's likely we're going to be breaking down soon. We do have negative divergence starting to form really on the 60-minute chart. So you can see here, let's mark it out. You can see here that we're downtrending in momentum on the RSI and as well as the PPO. So there you go. There's your downtrend on the 60-minute, and yet this little spike right here was a new higher high in price. So there's your last divergent high. That we do have confirmed negative divergence on the hourly chart. And going back to the daily, we just fell right down to that kind of support line that has been holding, and we've held so far. So next sell signal would be a break of this trend line. And I think if we get that, that should set us up for a move. Looks like we've got some support right here at about 550. It's about 555. And then below that, right around 465 to 465 to 460, we'll call it, right in there. Yep. So I'm still anticipating us to break down. American Eagle, we just got a lower close today below that previous support line. So you can see all the closes, the daily closes that we had really right in this area. We had one slight dip right there, but we could say it's right about there, which is about 32.62. And we had no daily closes below that. You can see all through here. Well, recently, just today, we closed, below that. And so it looks like we broke support and heading down to the next level of support, which is down. I see it right here at about 30.67. So not too much more downside. That's another 4% or so, 4.5% before we hit the next level of support. But again, I think we've started the downtrend in this one. Here's the uptrend on the daily chart. And these things take time to play out. I put out videos every single day talking about this, but it doesn't mean that they're going to play out in one day. It can seem like a repetitive thing, but trends take weeks, months to kind of play out. So just bear with me on that one. But here's the daily chart, uptrend there, negative divergence at the highs, broke trend, chopping sideways, basically consolidating right through here, and looks like we're starting to break to the downside. Look for more downside to help confirm. Ultimately, I think we're heading down to this target right here at 26.05. That's really going to be, as of right now, about my final target. Okay, BlackRock. So BlackRock is, up in the area. I think we can go a little higher, but it's in the area where I would expect this thing to start to sell off and get some sort of impulsive rejection. We made a new high in price, and that new high just recently, there it is, really today, that new closing high is a divergent high. So you'll see here continued negative divergence. We have a new divergent high. We haven't fully back tested that trend line, so we could pop up another, let's measure it out, another 1.5–2% or so and back test that trend line. And then I would expect that to be the end of this bounce, and we start to turn down. Again, this one, here's your uptrend line coming off the March 2020 lows. Held support here, held support. Finally got a sell signal back in here. Back test 1 and almost back test 2. They haven't quite done it yet, but we do have a new divergent high. So any time now that we have this new divergent high, I would expect the selling to resume. And then I'm looking for a move down to 841.20 as the first level of support. And then we've got 791.30 roughly and then a possible final target of 668.47. Now, this one's obviously less probable, but we'll just have to measure that. Take each level as they come. And target TGT broke its trendline support right here, so you can see that we had this daily uptrend right there. We were walking up that the last couple days all through here. We finally broke. We haven't seen impulsive selling though. I haven't seen that big impulsive breakdown, and that's because earnings is coming up here on the 18th. So we got a couple days. They're going to come out with earnings, and then we're likely going to see this thing move. So that's why, I'm not really interested in shorting this thing right before earnings, but if we can get a bounce back up to trendline resistance, maybe up in here, especially after the earnings report, if they bid it up right to trendline resistance after earnings, that's the area that I'm really looking to short. That's the objective short area, is somewhere right up in there. So things to watch for on that one, because I would expect that if they gap it up after earnings, I'd expect the sellers to come out in force and this thing to reject and get a big sell down candle. So things to look for. I don't know if that's going to show up, but that's kind of what I'm looking for. And I would lean that way because of the big negative divergence that's been building for quite some time. We have PPO and RSI divergence on this, indicating that we're likely going to break to the downside. We got to get through earnings first. And DRIP. So DRIP is a bearish leveraged ETF, and it's 2 times leverage. So when oil falls, DRIP goes up. And I do still see DRIP heading up to about $14, $13.96 is the target that I've got right now. You can see on this one, we were selling down previously on this daily chart recently, and we started to put in bullish divergence. So see how the momentum's starting to creep up, especially right through here where I have it circled. Price continued to tick lower, and yet momentum was moving higher on the RSI and the PPO, signaling bullish divergence, where we were making higher highs and higher lows basically in the momentum, and yet price hadn't got the memo yet. Finally, price broke out. You had a big breakout candle right there. That was a buy signal or a buy trigger, in my opinion. So this is where you'd want to enter the position. And from there, it's really gone up, but we've been consolidating recently just sideways. Today, though, you can see we're gapping up and starting to break to the upper end of the range. Look for some more upside. If we get it tomorrow, we start to get that big impulsive breakout candle, I would look for a move. We're likely going to move up to 14 pretty quickly. Might not do it all at once. Obviously, that's a pretty big move, but a couple days with maybe a pullback in between on our way up there. So far, looking good. The bullish divergence is playing out, indicating that there's higher prices to come. And we haven't seen a new high yet either. So again, just looking for prices to do this. Maybe we get a pullback and run up there like that. Looking good so far. As this one's up almost 6% today. And if oil falls, if oil continues to sell off, then it's very likely that the market, the S&P 500, is going to sell off with it. So, they oftentimes will trade in the same direction. When oil's rallying, the market's rallying, and vice versa. So things to look for. It doesn't have to work out that way, but definitely things to look for. And AMD, we'll wrap up here. Guys, if you're still with me, leave me a thumbs up. If you find some value in this content, it helps the channel. I do appreciate it. I'll continue putting in effort to make these videos. AMD here. So this trend line is going back from 2016. You can see it all the way back here on the daily, going back many, many years. Clean bullish uptrend right there on the daily chart. But we recently broke trend, so there's your breakdown back here in March of 21. We've had a series of back tests. So we back tested once, twice, and then most recently you can see they just power ramped it straight up, broke it above the trend line. It had a lot of momentum to the upside. So it recovered that broken trend line, which is marked in red here, but then at that moment in time failed basically. And we fell back below that support line. We're getting rejected now from above. And that's the same with what happened today. You can see today, the first hour of the day, they hit the trend line and sold down and just went flat, basically. So we're continuing to get rejected on that trend line. Again, this has big negative divergence. See that on the PPO? how we made a former high in the momentum right there. There was your last kind of peak in momentum, and that was all the way back here. And then each new high that we've made has been on less momentum. And recently we made a new all-time high right here on much less momentum right there on the PPO. Not on the RSI. It was an equal high in momentum, on the RSI. So there's your former high and there's an equal high. But equal high in momentum with a higher high in price is still negative divergence. Okay, so that's things to look for. I think we likely saw the near-term peak in AMD. We might chop around a little bit more, but I think the lean is going to be sideways to down at first, and then the intensity of the sell-off will become more obvious as more and more selling plays out. And I think it will the intensity will grow. We'll see larger selling days in this thing. So I would expect the main level to watch, though, one of the key levels on this is right here. This is your former level of resistance, which is about 98.70. If they gap this thing down or break it back below into this range, then we should very likely go to the bottom of the range, which is down here. And then if we break the bottom of the range, I'd look for this thin zone right in here where we have hardly any trading just to get filled. Okay, so on this trade, there's things to watch, but you got a break of this level at about 98.30. Trade down to the bottom of the range, a break of that at about 73.60, 73.50 we'll call it, and that should bring us right down to 58.76, which I think would probably be the final target on that. But so lots of things to play out, but things to watch as time goes on. I'm going to wrap it up here, guys. Let me know if there's anything you want me to check out, and I'll try to include it in a future video this week. Otherwise, I'll catch you guys on the next one.